I'm making his dog like I'm in the big leagues. Told him that I gotta go, dog. I'm riding a road, y'all. I think that I'm back in my bag now, so I need that go, y'all. Got hits when he throwing the fastball.
What's up, guys? Austin from ATG. Today we are in the office. We are going to actually hop on a Zoom call with my buddy Jack Gleason from Startup Trading. So just to tell you guys a little bit about who Jack is, he was one of the first traders that I ever stumbled across when I first started my journey 4 years ago. I actually used to watch like his Nadex videos like in 2017, like right around there. So Jack's been trading for 12 years. We're going to talk a little bit today about his intraday trading strategy, see if there's any valuable bits and pieces that we can grab from that and apply to our strategies. It's always good to be able to converse with different traders that you know are successful, that you know actually obtain the results that you want. I can verify for a fact that Jack is legit. We would never have anything that's not legit on the ATG page. We do not fuck with the furus at all. So Jack is definitely going to be sharing some value today, guys. So let's actually hop onto the computer, see what's going on, and see what we can learn today, guys. All right, guys, so we're at the setup now. Just got the Zoom link from Jack, so we're going to click that and hop on there. We will see you guys on screen next. All right, guys, we are on screen now with Jack from Startup Trading. So he is sharing his Thinkorswim charts down below. So we'll let Jack jump into it and go from there, guys.
Hey, thanks all for attending and watching. I hope to be able to provide a lot of value for you today. I'm going to be going over with Austin some of the strategies I use for intraday day trading and give you guys a couple of pieces of advice that you're definitely going to be able to use. It's going to be helpful for you specifically on trading smaller time frames. I'm going to start this off by saying the best piece of advice I ever got when it came down to trading was there's 3 things you really need to understand, and that's price, momentum, and time. Now, how you define those characteristics is going to be left up to you. Price simply is support and resistance levels. All traders have different ways of formulating support and resistance levels, whether it's trend lines, previous highs, Fibonacci sequences, or just general demand and supply zones that they can see with their own eye. Now, the other calculation that you have with momentum is, for me, the way I look at it, if a bar is overlapping or bars are expanding. And one of the things that I include in my framework, which I'll go over here today, is expansionary bars calculated using what is called the average true range. And the average true range can be calculated over any number of series of bars. You can have a 10 bar average true range. You can have a 14 bar average true range. Obviously, the longer range you use, the more factors can be taken into consideration. For intraday trading, I use a 10 bar ATR. And one of the things you're going to see on my screen is this code that I've had custom built. It's on the top left of my screen. And it's calculating a couple of things. Number one, it's calculating the average true range times 1.5. So the average true range here for the Russell, actually, I'll just go the ES, probably the easiest to, it's the most liquid futures market for indexes. But the S&P 500 here, this calculation where it says ATR 10, that means it's calculating these 10 bars, and the factor is 1.5. Now, in my study, I can actually go in here and edit this study. So I'll go in here, edit this study, edit properties, and I can change the factor, which is the multiplier of the average true range, as well as the number of bars that I want included inside of the factor. But when I'm looking at the market, I'm looking at the market in 25-minute segments when I'm day trading. So the open, after the open, 25 minutes into the day using East Coast time zones is 9:55. For me, 9:55 is an important time frame of the day that kind of really sets the tone of the trend of the market. The opening orders are out of the way. That's one of the most volatile periods of time. It's one of the highest volume periods of time. And it's also, for time of the day, for me personally, if I'm going to get spanked, it's going to be in the first 25 minutes of the day, because I'm either going long into a brutal sell-off, which I actually did yesterday, or maybe getting short into a rip, which nobody likes to do. So if you're ever unsure of which direction to trade, my best advice is to wait for 25 minutes into the day. And that is part of the reason that I use a 10 bar ATR. What that's doing is that's calculating to me out of every 10 minutes, what is the average range? So if the factor is 1.5 and we have an ATR of 750 right now, that's some pretty easy math. That means the average range is actually 5 points in the S&P 500. And that's current. So the average range in the S&P 500 is 5 points. Now, the other important thing that I like to consider, obviously, risk control is a huge part of trading. I like to know if I were to take a trade, my stop size intraday is 1.5 ATR. Now, I used to use stagnant stop sizes, meaning I would just go into every single trade. I've been trading the S&P since they were at like 600, 700. I've been trading since 2008. So back then I could use a 6-tick stop because the market was, 1/5 this current size. But as the market evolved and, we obviously have expanded in range and size, and the market's way, way bigger than it used to be, I had to adjust my trading strategy, and I started using what I think is an appropriate size stop where I know, hey, if it goes 1.5 ATR against me, I'm wrong. And that's why I have that calculation factor at the top that tells me if I'm risking 7.5 points, I'm going long or short. That's $375 per contract of a full size mini. A micro would be 1/10 of that. But I've been chatting a little bit, so I'm going to let Austin kind of maybe lead me in the direction of any questions he has personally, and we'll move on.
So that whole ATR thing is a custom study that you had made, right?
Yeah, it's a custom study that I had made.
Perfect. So where can people get the custom study if they wanted to use something like that? Because it obviously looks super beneficial.
What I can do, it only works in Thinkorswim right now. I know you use TradingView, so Austin and I have talked about it getting built into TradingView. But if you want, I could provide a link for the Thinkorswim code here, and then when you get that TradingView code up as well done, you can throw that link on maybe sometime later in the future. But right now, I could immediately get you involved in that ATR code. But yeah, it's just that yellow bar. It's going to print the yellow bar every time we make an average range expansion above 1.5. And then it's going to give you the risk factor as well as the number. So I use it for stop size as well as if you look at the market. The open is always going to be an ATR expansion, like literally every single day, because it's the most volume. Typically speaking, but you'll see in the middle of the day, like when we have this ATR expansion right at 210, when we have an ATR expansion, one of the things I do is I count 25 minutes out. Like I was talking about that factor of 25. So 1410 add 25, we're looking at 1435. And I will draw just a vertical line on my chart and say, well, what's the market doing then? If we've kind of stalled out and been unable to breach that expansion, what that's telling me is the market expanded. We're right at really the current highs of the day, and we're not pushing through them. So then I'm starting to look for potential weakness or setups in that weakness. And one of the other indicators that I have on my chart that is available on the Thinkorswim platform for free is this dashed red line, or these dashed red lines, and that's called the parabolic SAR. It might be available on TradingView as well. I'm not sure. Is it? Yeah. So if I see, like here you have an ATR expansion down, and then shortly thereafter you have a PSAR break, I might be looking for, some type of entry where I can risk whatever the ATR is times 1.5 into, a short setup. And then the only other indicator I really have here is this VWAP, which obviously anybody can get a hold of, and then a couple of price-based indicators. It's really not too noisy. Now that I've talked about it, it's like, well, I have this indicator and that indicator, but all of my indicators are related to price and momentum in direction of the trend. But yeah, that's where they can get it. I know that was a long-winded answer for your question on where they can get it, but.
Oh, perfect. So diving into like trade setups a little bit more using these indicators as an added confluence. So besides like a PSAR break after you get like these extended expansion bars, like what else is like going to be like a typical like intraday setup for you? Like what are you looking for every time that you place an intraday trade besides an expansion bar or in confluence with an expansion bar and a PSAR break?
I'll go over the one setup here that I often trade more than just one setup a day, but today I was coming off a losing day. And so when I come off a losing day, I like to make sure I'm a lot more patient. But the one trade I did take, which I was pretty happy about because it was an incredible trade and was really patient for it, was this level here near 22.18, or actually my bid was 22.21s. And let me show you what this level was. When I'm trading, what I'm looking at is all 4 indexes simultaneously. So I have the NASDAQ on my top left, ES, and not in any particular order, but the ES, the YM, and the Russell. And when you're looking at all 4 indexes, you'll be able to see divergences between the 4. So let's say only one market is getting a new low of the day, and then we're reversing. What I saw at what time was that? This was right at 140. At 140, if you look across all of my screens, and I'm going to zoom in here so you guys can see this in a little better detail, and I'll explain why I chose the Russell over the other markets. At 140, the NASDAQ had made a new low of the day. This purple dashed line, if you go to a 4-hour chart, I'll show you what that level is a level I had done up in my morning trade plan, which was just the lows from the 19th. So I knew that was a potential support level. It's just a prior daily swing low. Anytime I have a dashed line on my chart, that means it's a daily level. Depending on so dashed is daily on my chart. So if you see a dashed orange or a dashed purple, that means it came from a daily chart. If it's solid, it came from a 4-hour. And if it's, I should say this is dotted. If it's dashed, it's actually hour. This is dotted, to be exact. A dashed line would look like this, but I think labeling your support and resistance levels based on the time frame at which you came up with this one I just drew at 14,901, that is how I would draw an hour level. But labeling your support and resistance levels based on the time frame at which you did the analysis from, I think is extremely important, because once you're coming in, you're like, oh, where's this from? Like, I forgot. It's like, oh, that's a daily level. So anyway, we were coming down into that support zone in the NASDAQ, and then the YM made a low of the day, and the ES actually, let me move this over, made new lows of the day at that same time at 140. The important factor here is you got to understand the time frames when it comes to futures trading. 140 is coming out of lunch, and typically from 140 to 2 o'clock East Coast time is when you can see a reversal, because you have all of the traders who've been dicking around for 2 hours in the middle of lunch, and they're probably going to get stopped out. It's just a reversal time frame, just like the European close at 11:30 is a reversal time frame. The 1:30 to 2 o'clock is a reversal time frame because it's that coming out of lunch. The 11:30 is going into lunch. We had come into that, made a new low in the ES, and then instantly you can see these 5-minute candles on every single market. New low in the NASDAQ, new low in the ES, and then we got bid and closed that candle green. Now, at this point in time, I'm looking at all 4 markets. Well, the only market that was above its parabolic SAR was this Russell trade right here. And I had a support level, which was a trend line from yesterday's low to the low of this morning. So I have a trend line, third touch, which is really the only touch I trade. I had the parabolic SAR break to the upside, and then there was a reversal bar off of a new low, which if we can't continue through lows and get a reversal off of a new low, guess what's going to happen? Shorts are getting squeezed. So I gravitated towards the Russell because it was the market that had that higher high and did not make that lower low, and drew an intraday. And I know Austin uses Fibonacci sequences a lot, and I bid this 50% retracement and ran it up to what would be the negative 61. So really clear, clean trade there, just from that entry to that negative 61. And one of the things I do when I'm getting in here, right, on this first touch at 135, but we're going sideways for 5, we're going sideways for 10, and then really 15 minutes. It wasn't until the 20th minute, which if I like to set, as soon as I get in a trade, I literally have timers on my desk for 25 minutes. This is 25 minutes and 20 seconds. And I just hit start. And what that does is I used to get, when I first started trading, I get really complacent in my entries. I would get in a trade. I would be right. And then I would just kind of sit there and hold it with really no plan of outside of just hoping it's going higher or lower. And you stop doing your analysis. You stop doing, you're just looking at the market and you're looking at your P&L and you're not even trading, you're no longer trading the market. So by taking every 25, just looking at the market in 25 different sections, so 5-minute bars, that's what I typically trade on, is a 5-minute chart. I do analysis on higher time frames, intraday trade on a 5-minute chart. But when we start breaking out here, I count this first green bar as 25-minute, as the beginning of my 25-minute mark. So I get long at right around 135. Is that what yeah, that's 135. And then I set a timer for 25 minutes. But once we start moving, I restart my clock at 150, which takes me out to 115. And at 115, we were up here. So normally I would just go for that -23. But if we are above that -23 within my 25-minute time of beginning to move up, that tells me that momentum could potentially continue and I reach for the higher target. And that's a game time decision. And we have just come back into the same support level here in the Russell into, I mean, what is it? We got like 30 seconds to the close. Yeah. But that would be a strategy. And I think it's really helpful. Like, even if you trade just one of the markets, one of the things that's hard to get used to is the different sizes of the markets. Because the NASDAQ's the biggest contract.
Yeah.
And you can talk more about notional value at a different time, but the NASDAQ is the biggest contract. The way to calculate the contract size is by multiplying the tick value times whatever the price of the index is. So in the Russell, the tick value is $5. In the ES, the tick value is $12.50. And then you got to multiply that by, this might be over, some people's heads, but the NASDAQ is going to be your biggest contract. So if I were to take any trade right now, simply put, you could look at, I have all of these risk factors. The ATR for the NASDAQ on one contract is $615. In the Russell, it's $225. In the ES, it's $375. And the YM, it's $245. So when you're looking at all four markets, you can really decide a couple of things. One, which market has relative strength and relative weakness. Every single morning, I'm looking at, okay, over the last 5 days, the NASDAQ has been the most bearish market over the last 5 days. This is all information I'm going into the day with. So I'm probably going to try to stay away from short or going long the weakest market over the last 4 or 5 days because it just hasn't been acting well. Instead, I'd like to gravitate towards the strongest market, which has been number one, the Dow, and then I believe behind that has been the Russell over the last 5 days. So those are just key components I use as information gathered going into the day. And then I combine that with looking at, breaks of the PSAR with indicators, using Fibonacci sequences for targets and entries, which, some people are like, oh, fibs don't work. They just don't know how to use them realistically. And there is many different ways to use fibs. I have my own specific style of Fibonacci sequences that I use, but all it comes down to is just going back to that original formula that I started. You need to have some type of calculation, subtype of formula that's giving you price. I don't care what it is. It can be your demand zones. It can be your VWAP. It could be previous lows. That's giving you a general area for entry. But then you have to be able to understand momentum of the market, which is going to be that intraday price action. That's much harder to teach. And really, you just have to understand the concept. That's going to take a lot of time at the computer and just understanding the whole concept of momentum. That ATR indicator will probably help with that because it's a visual representation of when the momentum is increasing or decreasing. And then, the other factor is time. Most people really don't I didn't consider time in my trading for years. I didn't even think about it. And that really my trading is dramatically improved when I started making decisions based on time, because time is a component of trading and price.
Definitely. So when it comes to the whole timing thing, let's start with that. So the 20-minute or 25-minute timer, is that more of a self timer or is that more of a market timer for you? Is it more to keep you on your toes and keep you engaged with your trade, or is it more to kind of gauge a market dynamic?
It's both. So it's a reminder to, hey, look at the market and don't just be complacent because you got a good entry. Because if I just sat in that trade all day and never took it off, I would have seen my fantastic entry be up with $600-700 a contract all the way to go back to zero. You know, if I'm just blindly like, oh, whatever, I have a great entry and it was, well, guess what? It's not a great entry an hour later. You can make $700, but if you're sitting around, you know, you're not going to make any money. So it is an awareness thing, but also there is, you know, there's a whole series that I do in that indicator package that I have with that ATR code where I explain, and I mean, I'll explain some of it now, but obviously like any trading lesson, it takes some time to learn. But if you notice, and you guys can do this on your own free time, look at the market I look at the market in different segments from like any major high or low, what we're doing in the following 25 minutes. These orange dots are printed when there's what I call a swing mark high, which is basically the prior 5 bars or higher, and so are the following 5 bars. So that bar will not print till the 5th bar is closed. So you have a swing high here, swing high here, swing high here. If you're looking at the market in 25-minute segments, and I'm going, oh, okay, here at 2:45, we go lower, we go lower, we go lower, we go lower. We're still lower 25 minutes later. Your swing marks put in, your PSAR is broken, your back cross back below VWAP, and then we roll over into the end of the day. This is all a factor. It's not just my awareness, but if you look at the market, oftentimes, for whatever reason, this took me a long time to figure out, we move in 25-minute cycles. So you can see here, the sell-off begins at 3:20. So that's 5, 10, 15, 20, 25. Okay, after 25, you have your first green bar. Let's look at this move up here. 5, 10, 15, 20, 25. After the 25th bar or the 5th bar in the 25-minute, guess what? Your first red bar. So it's just something that I've noticed, like here, 1, 2, 3, 4, 5, we stop moving. It's kind of crazy, but if you pay attention, what's up?
It's almost like timing momentum with those swing bar indicators as well.
Exactly. And so like if we're breaking through, let's say like even here on this low of the day, like this was a support level, but I was going to try to buy it this morning. I didn't get a fill. I got front run and then I did nothing till we came back down. But at this point, it's a second test. So I'm not going to buy a second test just out the gate. I'm going to wait around and I'm going to see what we're doing after 25 minutes of the first test. I might be giving up price action. Like I'm probably going to have to buy a little higher if I'm going to wait, but I'm by waiting for that, I'm also getting confirmation. So, we tested that at 12:25. So 12:50 would be the 25-minute mark, and 12:50 we end up dipping, getting back above, and so we were still below this like most recent swing low of that cycle. So I waited another 25 minutes, so we had 25, so 12:50 plus 25 gives me 115. So that was right here. 115. So at 115 we're above. Now we're above these swing highs. Okay, but I'm not just going to chase the market up here. Now I'm waiting for a pullback. I'm saying, oh, okay, this 25-minute cycle wasn't really bullish. This 25-minute cycle was. And that's when you break the market into smaller time frame cycles. You begin to look at the price action in smaller groups. I think sometimes we get stuck at looking at too much of the bigger picture. The bigger picture is the support level down here, but the price action is where you make the money intraday. The bigger picture is, like that's where you're going to get the levels that you want to act on. But if you want to learn how to read price action, you need to break it down into some form of time frame that's relative to what you're trading. And if you're trading intraday, I mean, I've actually never done the calculation, but there's 6.5 hours in a trading day. How many 25-minute cycles that is? I'm not going to do it right now, but you get the point.
You can figure that out.
Yeah, you can figure that out. Do the math on your own. 6.5 hours divided by 25, whatever that equals.
15.
There you go. So 15, I mean, and think about the market in 15-minute different cycles. And, that's how you day trade. You want to be you can swing trade off higher time frame levels, but if you want to read price action, you got to be doing it on the smaller time frame. That's where you're going to get the edge. I think the best traders are aware of higher time frame support and resistances and where those levels can lead, but at the same time have the ability to read price action on the smaller time frame, and that truly gives them their edge.
Absolutely, definitely. That's like where everything is going to come into play. The higher time frame variables are just going to give you that conviction to take something there, but you need to be able to read the price action to figure out when to actually do it. So that's a good point as well. So with this trade that you took over here off the 50% retracement, it seems like the technical components that you were using there was obviously the fib retracement with the 50% level. You had support off your parabolic SNR or SAR, and then you had the key level and you had a trend line third touch.
Yep. And you want to talk about confluence, like that's a lot right there. I mean, that was the only trade I took all day. Now, normally I am more active than that, but like I said, yesterday came off a losing day, and a big part of, staying alive as a trader is knowing when you're like, I just wasn't like mentally sound. Like I came in the day hot, I was up money. And then I just proceeded to give it all away. And you want to take a look for people who are watching this later, what yesterday looked like. It looked like this. Okay. It was like the biggest move down in a couple months. So, being on the wrong side of that isn't fun, but that's me also not even following my own rules that gets me in that position. And that's why I go back and I'm like, oh, I need to not be and actually listen to what I know about the market. There was an expansionary bar down 1, 2, 3. I should not be trying to buy that. But, we've been in such a aggressive long sequence market that's really been the only thing working, that I'm not even thinking shorts until the day of. And then it was just a slam off the open and, a couple stop outs and, you're like, oh, it's not fun.
Definitely. So just to like break that setup down one more time before I go into the next thing I wanted to ask you, it looks like you're just like basically using, was that a 4-hour level, the dashed one?
Yeah. So the 4-hour level, this is a fib level that I had. It's a full halfway back. So it's the full 50% retracement from last week's low on Monday. Every single morning I know where all the higher time frame fibs are. So we have a full halfway back, which is, almost any fib trader would be potentially looking where that level is. And I always like to turn off my extended session to kind of see if a level looks clean as well. And you can see that is actually the resistance from last Wednesday that we broke out and gapped above on Thursday. So just from a general price action zone standpoint, if somebody's a zone trader, they would probably look at that general zone as a retest. So that I'm coming up with in the morning. And then I also drew a trend line after this low was put in at 935. So the start of the trend line here. And then this is the third touch, which is the touch of the trend line that I typically trade. I don't really trade fourth and fifth touches. It's just 1, 2, 3. I trade the third. I like to see confluence, or at least pay attention to a reaction. And then, yes, we have the cycles get bullish. The 25-minute cycles get bullish. And then we have a PSAR break kind of confirming that momentum is changing to the upside. It's the time frame. We're coming out of lunch. It's coming into 2 o'clock, which is when that nicey doldrum middle of the day kind of ends. And then I'm even using a smaller time frame Fibonacci sequence pullback. Now, if somebody's new to trading, you probably realize all of the calculations that are going into a single trade. This stuff took me a long time to learn. I don't want you to feel lost by any means. I want you to be educated by this video. That's Austin and I. Both of our goals is obviously to help people along the way. We know what it's like to start knowing nothing. I was just like you guys when I started. I was 18 years old, freshman in college, wanted to trade, didn't know how to, but I fucking hated college, so that wasn't going to happen. And I had to figure it out.
Yeah. Same story, dude. I just didn't even go to college. I was 19 when I started.
I think if I didn't go to college, my dad probably would have kicked me out of the house. And at that point, like, that wasn't really an option for me. So I went for a year. That was it. And then my dad basically still kicked me out of the house, but yeah, we get along now.
Worked out. Cool. So just to like recap pretty much everything. One thing I wanted to ask you about the ATR expansion bar thing is, will you normally, in most cases, I guess in this case we couldn't really apply it here, but like if you saw the expansion bar was like a bearish candle, would you be looking to trade in the direction of that expansion bar, or are you not really using that as a factor with those?
It really depends on the general theme of the setup. I don't typically like to fade in. If the general trend is down, which right now it is, I don't like. So if the hourly trend is down, I will not fade an hourly down bar. Okay, an hourly expansion down bar, meaning I will not buy a 5-minute expansion down when the hourly trend is down. If the hourly trend is up, I will buy a 5-minute expansion bar to the downside. So that's the clear determiner. Otherwise, like here we have a very clear, and just don't confuse trends. Like just trends are just simple trend lines. Like, are we making higher lows or lower highs on the hourly? Like, just define it like that. Like yesterday we were making higher highs and higher lows, but I'm not going to just buy it because I have a bar down, like an expansionary bar down. That's not a buy signal for me. Yeah. It's just if we expansionary bar down directly into my support, and I still think that support is valid, I will take that trade. But like in this case, we have an expansionary bar down here at 1220, and I know that higher time frame is down. What I'm telling myself is, don't be an idiot. Literally just wait 25 minutes. You're not going to miss out. I think we have the, as traders, we want to react and get in, and, we have this tendency to over trade. But the easiest thing to do is when I see that yellow bar pop up, I go, okay, 1220, drag it out to 1245 and just wait.
Yeah, definitely. So like, are you using these more of like a tool to calculate exhaustion or to calculate momentum?
To me, those are factors that are both determined like after. So if it is a momentum signal, but it becomes an exhaustion signal if it fails to continue. Gotcha. So I look at initially when the bar prints, it's a momentum signal. If the bar prints and we don't continue over the next 25 minutes, that then becomes an exhaustion signal.
Gotcha.
And you can like look at like this breakdown here. The previous time we had an ATR expansion was 1135. Like everything below the beginning of that move down is, that's just resistance, right? Like we puke down, we rally back up. Well, guess what that is? It's just a 50% retracement short for the day. But yeah, so hopefully that answers your question regarding expansionary bars to the downside or upside.
Makes
sense. So yeah, go ahead.
Like if the trend continues into the bar, then that's a sign of momentum. But if it stops moving in that way, then it's a sign of exhaustion. So you basically have to use following price action to make that determination. Exactly. Like here in the morning, and when you have like them go down and then back up into each other, like basically we just go immediately into a wedge, and that wedge lasts all the way that was a 2-hour wedge. So we go expansionary bar down off the open, expansionary bar back up, expansionary bar stall, and then we wedge for 2 hours. And that's the type of price action you're going to see. But once again, within 25 minutes, if I hit 9:30 open, 9:55 is the market await. That's 25 minutes. Well, 25 minutes, guess what? We're back right at the open. And we've, although this is a huge move, you got to be a sniper of a trader to get long and get back out, because a lot of times when you see these big moves, you think you're going to ride them. Definitely. Instead of just banging the keys and being like, hey, I just made 15 points in 10 minutes. Like I should probably just take it. Like exactly. That's the aspect comes into play and helps out a lot with that, because if you are aware of that, it gives you like a really good idea of the exits. Like just like you were saying earlier, like you get in a trade, if you don't use that time or you kind of stall out, like I definitely think the exit strategy is just as important, if not more important than the entry strategy. Mm-hmm. So absolutely. Sure. And honestly, when I see like, as we were expanding, and that's why it's important to be aware of like support and resistance, like we can expand down, but that's a daily halfway back long. We're not just going to crack it. We're not just going to rip through that level. So you need to know, hey, we just double expanded down. Like we went from, we dropped 20 points there in 10 minutes. You're not going to get more than that. You just had 2 expansionary bars down into a daily support level. You're not going to get continuation on that trade. Take your money, get out of the trade, move on. Definitely. So it's really interesting, like how you broke down like the whole intraday entry strategy itself is basically like using higher time frame confluences, whether that be levels or fibs, and then just finding your entry signal based on the same factors, just on like a lower time frame, just breaking it down from there. Yep. It makes sense because it gives you your entry zone with the higher time frame level, and then you just have to pretty much time it right with the lower time frame confluences and technicals there. Yeah, I mean, just like that piece of advice is, worth the price of admission to anything you want to get in. As far as it comes to education, you need to learn how to define support and resistance using some methods, but then you need to learn how to read the price action off those support and resistance levels. Definitely. That's a really, really good point. Just breaking it down once it gets into that spot. Cause I feel like most people, they'll have those levels drawn and then they'll just be watching it on whatever chart that may be. Like, so let's just say you drew that 4-hour level. They'll watch that on the 4-hour chart throw that order on there and not really like have any idea of like where to place their stop or where to even place their entry. They're just kind of buying into that zone. So dropping time frames and like reevaluating it from there is like a really, really good point of view that I think a lot of people overlook.
For sure. And especially if the other thing is like, if you're sitting at a computer all day, like and you're day trading, like how you got, I can't sit there and look at a 4-hour chart when I'm at my desk. Like I can look at it once in the morning, but that 4-hour chart, guess what? It's changing once every 4 hours. You know,
Exactly.
if you have a developing bar, move to this smaller time frame because you're going to miss out on learning so much about price action by sticking to those higher time frame charts during the day when you're trading. Okay, if you want to do your analysis in a higher time frame, go ahead. But if you want to learn how to analyze price action, get off those higher time frames when you're at your desk.
Sitting there for days just to figure out what's going on, you know?
Yeah, you'd be really, really bored.
Yeah, no, trust me, dude. That's how I was. That's kind of why I switched to futures overall, just because it was a faster paced market than what I was used to.
Yeah, well, also you'll probably notice from switching over to from forex is like there's I think there's on the smaller time frames, which might have been a change for you, that futures are more technical. Like you get those, you know, a lot of news events in all the forexes. You get those, you know, mad wicks.
Definitely, dude. This is much better for me because like once I opened our office, like all I had was time to trade. So then I was just not really looking forward to being in swing trades because I'm just sitting there all day long, you know, monitoring shit. So on higher time frames. So then that's when I started exploring this a lot more, and quicker paced action and it being mostly technical was a blessing because it's a lot easier to manage at that point, especially from an intraday perspective. Like you don't have to worry about crazy wicks flying all over the place, let alone CFD brokers like throwing dodgy wicks all over the place. Won't even get into that right now. But you know, it's futures is way better in my opinion. Like night and day difference. I'd never go back.
Yeah, I mean, I used to trade like, I mean, I would look at forex. I used to trade forex futures in 2012, like when the Euro crisis was going on, because they got really technical to the methods I use. But as I've kind of evolved my system over the years by like really looking at just the indexes, like when you look at all 4 indexes, they all correlate. Like, I mean, of course the futures pairs correlate, but nothing correlates like the ES, the YM, the N, you know, the N2, and the Russell. Nothing correlates like those. So I mean, you can look at the USD JPY and like, you know, the Euro JPY or whatever, but like if you want to come up with a really good trading strategy that uses correlation, I think looking at, you know, the 4 indexes is good.
Yeah, I couldn't agree more. They're all pretty much moving the same way. That was pretty good, bro. I don't think I have many more questions besides that. I wrote a bunch of stuff down. Just gonna look over it one more time. So like, do you have like any different settings like on your PSAR or anything like that, or is that all?
Yeah, I can go over all of my settings on my Thinkorswim, you know, because you guys can make them anything that's custom. So just to be clear, there is a variance of custom indicators on my chart, and there's you know, ones that are built into Thinkorswim. I'll go over the ones with Thinkorswim first. Under my studies, I have the parabolic SAR, and you know, you can pause this video and take a look at this if you want to change your settings. I think these are both default, the acceleration factor as well as the acceleration limit. I have my width to 3. My color is, I don't know, Piat, whatever the hell that, or maybe I don't even know what color. It's like magenta or something. And then I think the default is these bubbles, but I have it as these lines, a little easier to see for me. So that's what I have for that. And then I have a 9, and I don't really, it's just kind of in the background of this simple movie 9. I think Austin actually taught me that one, right? That's one you use, 9.
I use 13 EMA.
Oh, 13 EMA. Yeah. Oh, maybe I changed it and didn't save, but I just use that for similar to the way Austin uses to watch for reversion to it. Obviously, just the 9 a little quicker than the 13. And then the VWAP I have here. The upper band and lower band both come on the default. I have that turned off, so it says show plot here. I just uncheck that. I don't really want to see those upper bands. And then my width is 3. My color is, you know, I guess pink. You know, it doesn't really matter what color it is for you guys. It's just for me, I don't like my indicators to be the same colors, like overlapping colors. So I try to make everything different. And then as far as the other indicators that I have on my screen, it's the things that are custom to me. The things that I've built are this accelerator, the ATR expansion bar, which is the newest thing. I've only actually made that in here in 2021. I wish I had it 10 years ago, but that one took me a long time to figure out. And then I have just these dots on my screen that just mark swing highs and swing lows. And then there's this, which I didn't really go over. We can maybe do another video on this This white dot is just the beginning of a move down that lasts 3 bars or longer in one direction. So you'll have a red, red. I mean, this is a down bar too. It just turns yellow because it's an ATR expansion. But that'll plot a white dot at the top, and I treat that as resistance.
Interesting.
So
Okay.
Yeah. So I call that a leg start.
Interesting. Okay.
Yeah, that's something I came up with.
That's crazy. It looks like it works like every single time.
Yeah, I mean, it works pretty damn well. It's kind of crazy. That one also took me like over 5 years to figure out. So we're happy to share that with you guys here today.
That's really, really cool. So that one is also something that you had custom coded, right?
Yeah. So I have 2 indicator packages. One of them is just this ATR code, and the other one includes basically both of these swing dots and leg starts. But yeah, those are both things that, you know, took me years to figure out, and I had them coded up, and they've added a ton of value to my trading. They really help with both, you know, understanding momentum. Oh, really, it's just price and momentum. And then the timer, Amazon, baby, keep 2 of them on the desk. Yeah, $7. It's the cheapest thing I have to offer you guys. $7 Amazon timers. You can use your phone, but I don't want to be on my phone all day. I used to do that, and I was like, you know, I'm just gonna get some kitchen timers.
Everything like that. Well, that's really cool with the indicators. Yeah, we'll definitely get those coded up on TradingView, make those available. So I'll test them out, make them available. Everybody else can test them out too. By the time that we drop this video, we'll make it so everybody can have those. And then, yeah, this is sick, man. So it's really cool, like, because I always saw your charts before and saw all the different colors and like never really understood like the point of everything.
Yeah.
In terms of like the yellow candles, and obviously like parabolics are parabolics, but like the little dots and everything, like it all makes sense when you look at it that way.
For sure. I mean, like anything, it's breaking down somebody's trading strategy that they've been developing for like 10 years. I can imagine it looks like rocket scientists. I mean, that's why, you know, guys like you and I, like, we have courses. I mean, if you want free, I mean, this is free information, right? But like my course is just so much more in depth, because at the end of the day, like, this took me a long time to figure out, like, you know, and I always tell people, I wish I could have taken my own information that I give out now. I would have saved myself a lot of time and a lot of money.
Exactly. I mean, that's why I hit you up, dude, because I wanted to add to the playbook, and I was just not wanting to continue that testing cycle. I was like, you know what? I'm going to take a page out of the book here, hit someone with more experience, and just dive in from there to get another angle if I want more. That's the best way that I've found to attain knowledge, is just hit up the people that know exactly what the hell they're doing, that have been doing it for a really, really long time. So it doesn't get much more legit than that, you know?
Yeah, cool, man. Well, I appreciate you reaching out. This has been a good conversation. I'm excited to see the final product, and we'll chat soon.
Appreciate you, man. So yeah, we'll just get this recording uploaded, throw all the description links out there for the indicator packages, descriptions to Jack's page. Jack's, you have a YouTube channel still, right?
Yeah, I think it's just youtube.com/startup trading. My Instagram is, I have 2. I have one that's just like Austin. We get a lot of fake Instagram, so I'm not going to DM you. Let me just say that first and foremost. I have a Trader, just literally Trader is my personal, and then my business is startup_trading. So if you guys want to just shoot me a follow there, and then check out my YouTube, whatever, feel free to reach out, and look forward to chatting with you.
Perfect. Thanks, Jack. Appreciate you, bro. We'll get this video out there, and hope everybody appreciated the content, and Jack for taking time out of his day to pop up on here and share.
Make sure to like the video for Austin and subscribe to his channel. Absolutely. Like and subscribe.
Yeah, like and subscribe, guys. Awesome. Thanks, Jack. Talk to you later, man.
Later.